Good morning, guys, and a happy new year to all of you. Oh my, it's 2023. And hey, in today's video, we'll actually be talking about the yearly chart. This video is probably going to be the most important video for the year. Yes, for the year. It's going to shape your mindset. It's going to help you frame how you should approach the charts leading into this year. We're going to be talking about the psychology I want you guys to adopt going into this year. And more importantly, I'm going to be telling you guys what I'm going to be looking for to flip into that aggressive bullish mindset. Now, aggressive bullish mindset might be a little bit too strong for word, but this trigger, guys, is going to be very similar to the trigger I discussed all the way back in December 2021. Yes, 2021, not 2022. Bitcoin was still sitting above $55,000. And I said, if Bitcoin loses this level, if this trigger triggers, I will stop taking leveraged long trades on Bitcoin. In fact, I will not be looking for a long trade on Bitcoin for a very long time if Bitcoin failed to hold that level by the end of the year, by the end of December. If you guys remember, I'd said all I want for Christmas was for Bitcoin to hold that level. And Bitcoin, unfortunately, did not hold that level. And what do you know? We got one of the worst bear markets in Bitcoin's history right after Bitcoin lost that level. We're now sitting at $16,000. Today, I'm going to be giving you guys a similar trigger where if Bitcoin reclaims this level, I am going to start looking for those bullish positions again to the upside. But before we talk about that trigger, I want to spend some time discussing your emotions and your psychology going into this year. And I've put together some charts for you guys right over here. We're going to go through an exercise, okay? This is not really a forecast, but this is more so an exercise, a quick, easy, simple exercise that will allow you to frame your mindset on multiple possibilities that we could have this year, okay? And you know, I want to talk about something. I was having a discussion with a few friends of mine who have survived over these years in crypto, not just 2020, 2022, guys. I'm talking about all the way from 2016, 2017, okay? That entire bull run and the bear run that came right after. In fact, let's switch back on over to the charts really quickly. Right over here, I'm going to switch on over to Bitcoin's weekly. So I was talking to these guys and we were reminiscing on what has passed and auguring on what's to come. We had different opinions on Bitcoin's future price, etc., etc. But there was one thing that we all agreed on. Okay, remember, guys, we saw Bitcoin go from 900 all the way to $20,000, and then we traded through this entire bear market phase, okay? Unlike many others who just sat through this bull run and then gave back all their money, got disheartened and never entered crypto again, we traded through this entire period right over here, this entire period. And there was one thing that we all agreed upon. We agreed that it wasn't this bull run over here from around 10,000 to 50, 60K that we remember the most or we think back fondly on the most. It wasn't this at all, guys. It was actually this period right over here, okay? Especially for me, everything started coming together around this area, okay? Around this area was when my trading strategies, my discipline, my risk management, everything came together. Because I had trading strategies during this period here, okay? I had really good trading strategies and everything. But my risk management and my discipline, those two together were needed for my trading strategies to see its fruition. And it was this period here, this entire period here, that we remember most fondly. This trading session especially, that we remember most fondly, because that is what made us. That is what made us. How you trade here, how you trade in this area allows you to capture the most of this area. Now, similarly, you guys are getting an opportunity. All of you who entered the market late are getting an opportunity to trade in this zone. How you trade here is going to determine your future. If you simply get complacent and wait for this, you're not going to have much of a stack to actually take full advantage of this big move that will come again. I remember having a similar conversation with Krisha where I said, hey, you know what, Krisha? Back in 2017, we wished for the bull run to just keep going and going and going and going. But now, fast forward to 2020, we are so glad that we had the bear market. We are so happy that we got the bear market because it forced us to, one, learn how to be good traders. Two, it allowed us to freaking 10x our Bitcoin stash. And three, hey, because of one and two, we are now financially free, right? Having one without two is actually kind of useless. In fact, I would imagine it being very stressful, because if you have a big stash of Bitcoin, crypto, whatever it is, right, but you don't know how to actually trade, you're always living in fear. You're always waiting for someone else's call. You're always wondering whether you should sell, how to manage your risk, etc., etc. But because I know how to trade, because Krisha and I know how to manage our trades, manage our risk, we aren't all that worried about losing our stash. If Bitcoin goes to zero, it's going to sting, but it's not going to be the end of the world for me, because I know I can trade another market and always work back up to the same position I am today. And that's freedom, guys. That's freedom. So make sure you do not get complacent in the year 2023. Focus on the journey, not the destination. I want you guys to make 2023 about the process. Step by step, day by day, week by week, build your stash. So that way, when the big bull run comes, because it's going to happen also very fast, guys. Okay? Years will happen in a matter of a few weeks when the bull run does come. You want to be ready for that. Make 2023 count. Alrighty, here we are. Bitcoin just closed a brand new 12-month candle. Okay, so this is the 12-month chart, and as you guys can see, this here right over here, this candle is the 2022 candle. Now, we just opened a brand new candle, which is why we just have a thin line over there. And this is what we're going to do today. We are going to go through two scenarios. Scenario 1, labeled here in green, and scenario 2. And in each one of these scenarios, we are going to try to visualize how the year 2023 is going to shape its candle. Okay, so in scenario 1, we have this candle here, and scenario 2, we have this candle here, right? Both of these are going to be possible ways that the candle may shape itself. Now remember, these are not forecasts, which is why I've labeled it here in red. Both of these charts I've labeled in red as NF. These are not forecasts. This is simply an experiment for us to go through the emotion of how this will play out. Okay, the psychological emotion, because this is very important, guys. Okay, at the beginning of each year, you guys should try to visualize how the candle may actually play out and the emotions of what you may go through. Because when we are trying to collect Bitcoin, we are not in it for the year. Okay, we are in it for the next cycle, correct? So visualizing how the candle may play out allows you to guard yourself. It allows you to temper your emotions. It allows you to get a psychological edge over the rest of the market. If you guys are confused on what I mean over here, I will be going into that very soon. And more importantly, guys, context. Okay, you guys are going to see some strong context of how things could play out and how you need to be ready for it. Okay, so let's go ahead and zoom into the charts. Alright, so we are zoomed into scenario 1 over here, and you guys might be wondering, Sean, how did you come up with this candle right over here? Well, I didn't come up with it from the top of my head. All I've really done, guys, is I've copied this candle over here from 2019 and I've pasted it over here. Yes, I know it's a terrible Photoshop job, but it's the best I could do with the limited time I had. Now, a lot of people are expecting a scenario to play out that is similar to the 2019 or rather 2018 bear market scenario, right? And the reason for that is, well, recency bias, right? We tend to look back to what most recently happened, and the most recent bear market prior to this one was the 2017 bear market. So everyone's expecting a huge rally and a huge bounce. Some people are calling it a echo bull market, right? Now, this could very, very well be the case. And if we look closely, you guys will see that in 2019, the rally actually took us all the way up to the prior year's candle open, right? The prior year's candle open was $13,000, around 13,900 actually, to be a little bit more precise. So we wicked all the way up to around 13,900 and then saw a sell-off pretty much half of the candle. Okay, so if we do see something like that, that would line up with us wicking up to around $47,000 in our current scenario, 47K, right? And then if we sell off around half of the candle, that would take us to around, I guess, 23.5K, right? So if you think about it, in the previous bear market, we rallied all the way up to around 14,000 and then closed at around $6,500, $7,000, right? And then in this market, if we do something similar, we'd be rallying to around the 47K mark and then closing at around the 23.5K mark. Does make sense, right? Now, I want you guys to actually visualize the scenario in your heads, okay? Go through the emotions of it and ask yourselves, are you ready to mentally execute? And ask yourselves, are you ready mentally to execute if a scenario like this begins to start shaping itself? Remember, we are not saying that this is what's going to happen just because it happened in the previous market. In fact, that is very, very naive to say. Remember, this is not a forecast. This is an exercise in your psychology, okay? So I want you guys to ask yourselves, if this scenario plays out, do you have a trigger to start positioning yourself for that upside move? Okay, this is a big rally. Okay, we are talking about a price move from around $16,000 all the way up to $47,000 to $50,000. Are you ready for that? If not, you need to have a plan and a trigger to start executing on that plan. Okay, because if you have not planned for that scenario and have only planned for downside scenarios, you are going to end up like some of my friends back in the 2019 market who had planned for further continuation down all the way from 3,000 to around 1,500 they were looking for, and that never eventuated. Instead, we got a big rally and they just watched the market go and go and go. And they ended up being short their Bitcoin stash at $3,000, watching it go all the way to 60K. And guess what, guys? Up to today, they're not back in the market. It's just too painful for them because they sold at 3K and they did not have a trigger to be wrong and get back into the market. You know, having an opinion and selling is completely fine. Okay, don't let anyone put you down for that. As long as you have a trigger to say, hey, I was wrong about downside. I was wrong about being bearish. I'm going to be bullish now. If you guys think back to when we had the entire COVID saga, Kusha and I sold a portion of our Bitcoin at around 6.9K to 7K, right? We were short Bitcoin during that period. And what happened? Bitcoin closed over 7.2K and we're like, oh shit, we were wrong about being bearish. We are buying back our Bitcoin. Okay, because we were mentally ready to be wrong about our bearish position, right? So the point of this exercise over here, guys, is very, very similar. Are you guys going to be ready to be wrong on not seeing further downside? If you are in that position where you're looking for further downside, are you ready? Do you have a trigger for a upside move? Because you don't want to end up like many of my friends who just sold their Bitcoin and did not ever get back into the market. And guess why? Guess why they were looking for the downside? Because of recency bias. Back then, the recency bias was looking at 2014's bear market, right? What do we have? We had this candle where we wicked underneath the prior year's bear market, right? Right over here, you guys can see that if we are to do something similar, we'd be wicking underneath. And that would take us to around maybe the targets of around 12K to 10K that a lot of people are talking about, right? Now, here's the funny thing. If you think about it, this candle over here in 2019 is in a way the complete opposite of the candle in 2014, right? The 2014 candle had a nice little body and a wick underneath, while the 2019 candle had a body with a wick above, right? So people who had the recency bias actually got dunked on really, really hard because the candle ended up being completely opposite. And I want to warn you guys against having recency bias. If you guys were here during the 2018 market, 2019 market, you guys need to be doubly careful. I know I am being mentally doubly careful to protect myself against my recency bias, okay? Which is why I think this exercise is so good, because we are currently looking at scenario 1, which is this candle, right? Scenario 2 is going to be this candle right over here, because these two scenarios together basically will cover most possibilities, because I want you guys to think about all the scenarios in the middle of these two scenarios, where in scenario 1 we have the big rally to the prior yearly's open, while in scenario 2, which we're going to zoom into right now, actually let's go ahead and do that. In scenario 2, as you guys can see, I've copy pasted the 2014 candle right over here, guys. You guys can see that we did not rally, that instead of having the big rally, Bitcoin actually wicks down underneath its yearly close, right? So scenario 1, we wick up into the yearly open, the prior yearly's open, and in scenario 2, we wick underneath the prior yearly's close. So these are two different extremes. And if you guys think about both scenarios, okay, this is scenario 2 right over here. Scenario 2, 2014's bear market, as well as scenario 1, which is 2019's bear market. You guys will guard yourself against both eventualities, okay? 2014 was rather bearish, okay? 2019 was a pretty bullish year. And keeping both of these scenarios in your mind will allow you to protect yourself, which is why you do not get overly bullish until we see that trigger. You can get mentally ready, right? We've been talking about various bull scenarios on this channel for past few weeks now, right? But I want you guys to not get overexcited until we see that trigger. You could have your own trigger. And in today's video, at the end of the video, I'm going to be talking about one of my triggers that I'll be looking for. So we're going to get to that very, very soon. Before we do that though, I want us just do one last thing. I want to put something into context for you guys, okay? And it has to do with this candle right over here. We talked about how this is a bearish scenario compared to the 2019 candle already, okay? We already established that, hey, this is a little bit more bearish than this scenario in 2019. However, I want to drill in a little bit more context with regards to this candle. You guys are looking at this candle over here and saying, hey, not so bad. We had a green year, right? This year closed green. It was a nice candle. Overall, not so bad. But did you take the effort to drill into this candle and go through the emotions on a day-by-day basis, at the very least a week-by-week basis? Because I actually did all of that while I was sitting through this bear market. I was mentally trying to go through what everyone else did in the 2014 bear market. I traded the candles one by one on a daily basis, not the hourly, of course, and I went through the emotions of those candles, right? When I say I traded them, I mean like I went through the candles and I tried to backtest my strategy and ask myself, what kind of emotions would I be going through on a daily basis if I had to sit through those candles? Now, what I've done over here is I have a screenshot of the weeks leading through that entire year. Right over here, you guys can see that we're looking at the weekly. And the big thing I want you guys to focus on is that this white horizontal that you guys see that I've marked out right over here, sitting around $315, that was the yearly close for 2014. Which means that for most of the year, guys, from Jan 2015 to November 2015, Bitcoin traded underneath the prior year's close, which means the entire year's candle was red up until November 2015. It was only in November that Bitcoin rallied above the prior year's close and turned the candle green. So when we scroll back up over here, okay, and we look at this candle that you guys see now, right, that we have marked right over here, okay, this was essentially this candle here, 2014. This 2014 candle, guys, was red. This candle was red for 90% of the year. And then right at the end of the year, right before we could close the year, Bitcoin rallied and closed the year green, right? So I want you guys to mentally also go through the emotions of the possibility that Bitcoin trades red, trades bearish for most of the year and closes green only towards the end of the year. I'm not saying that's what's going to happen, but imagine the emotions of that. Imagine everyone who got shook out during this period thinking that's it for Bitcoin. That's it. We are done. Bitcoin's never going to rally. And then Bitcoin does this. Because if you zoom out, guys, you can see that even with Bitcoin doing this, it eventually went way past all-time highs. So if you don't have that trigger and you're not mentally ready for some bearish scenarios, you will never ever be able to push yourself to get back into the market. The trigger is to tell yourself, hey, you know what? I'm going to stay bearish or I'm going to stay cautious until the trigger hits, right? That way you're not guessing. You're not guessing. So if Bitcoin does this for the rest of the year, we are just waiting patiently. We're just waiting. Like this could be analogous to our $22,000 region, right? This could be analogous to our 22K, where we're just waiting for Bitcoin to break past 22K. And once Bitcoin does that, we get bullish, right? Now, where am I getting this sum from? We're going to talk about that right now. Alrighty, and here we are. We're looking at Bitcoin on the 3-month chart, and I'll be telling you guys what trigger I will personally be looking for to start being more aggressive on my Bitcoin trades. If you guys want to follow along, all you have to do is switch to your 3-month chart, okay, then turn on your 21 EMA. If you guys do have access to the Mango ribbon, it's completely free, so you should have access. If you don't have access, join our Discord at themangoway.com and PM either me or Krisha and I'll give you access to the Mango ribbon. All you have to do is turn on the yellow EMA right over here, EMA 1, okay? That's going to be your 21 EMA. Remember, we're looking at the 3-month chart. What you guys are going to notice is that Bitcoin, for the majority of its lifetime, has held the 21 EMA on the 3-month, right? All the way from 2015, right? The bear market that we actually discussed at the beginning of the video. Bitcoin held it all the way through its run to $20,000, came down to $3,000, found support over there, back onto the COVID dump as well, found support, and we lost it in April 2022, okay? Now, ever since then, Bitcoin has been living underneath it and has been using it really well as resistance. You guys can see that Bitcoin poked its head above it in the months leading from July to around September, but then closed underneath it. Right after that, it wicked into it, rejected it perfectly, and closed the year underneath it, right? So that's going to be a very, very easy trigger using the 21 EMA, which is sitting at around 21,500-ish, but I'll be rounding up to around $22,000. So my trigger is as simple as this. I will be looking for a good candle body close above the 21 EMA on the 3-month chart. And when I say a good candle body close, I'll be looking for around at least 25% to 30% of the candle to be living above the 21 EMA. Usually I would look for 2 candles above the 21 EMA, but since this is the 3-month and we're talking about crypto over here, we can't really wait for like 6 months to get that confirmation, right? That would have us missing most of the run if Bitcoin does see that big volatile move like we saw in 2019, right? So looking for a single candle close with a good candle close above, around 25% to 30% of the candle above the 21 EMA is going to be good enough for me. All right, so let's say we get that $22,000 candle close on the next 3-month. What's next? What can we look for Bitcoin to reach if we get that trigger activated? Okay, now this is what I want you guys to do. Okay, turn on your Mango ribbon and turn on your MA2. Okay, this is simply your red 10 SMA. So if you guys don't have access to the Mango ribbon yet, go ahead and activate your 10 SMA. Okay, and what I want you guys to notice is that the 10 SMA is going to be a likely target if we get that candle close above the 21 EMA, and that's currently sitting at around $33,000. Now, some of you might be saying, hey, Sean, in the previous bull market, we just blew right past it, right? What makes you think that we're going to stop over there? Now, I'm not saying that we are going to stop over there, okay? I'm just saying that this is the next trigger point, or could be used as a partial take profit. I'm not saying sell all your Bitcoin over here. I'm not saying that at all. You could, one, use it as a partial take profit, or two, you could de-risk, okay, and wait for a candle close above it to put on risk again. So another way to put this is your trigger one is coming in at the 3-month 21 EMA, your trigger two to increase your bullishness and to increase your risk or reactivate your risk is going to be a 3-month candle close above the 10 SMA. Now, again, some of you guys might be saying, hey, Sean, how do you know the market's even respecting these EMAs and SMAs, right? This could just be a coincidence. You know, you could have a point over there since this is the first time Bitcoin is closing underneath the 3-month. But if you, again, turn on your Mango ribbon, and again, we're using default settings over here. I haven't changed these inputs. These are the default Mango ribbon settings. I want you guys to turn on your green 55 now. Okay, this is EMA2 in green right over here. You guys are going to notice that Bitcoin has come down and based perfectly off that green 55. Okay, this is the 3-month green 55. So I think that there is a good probability, in fact, a high probability chance that if Bitcoin closes above the 10 SMA as well on the 3-month, we are likely going to see continuation. Okay, so this 10 SMA, if we claim the 21 EMA, the 10 SMA, in my opinion, is going to be a magnet. If we claim the 10 SMA, that's when we can look for further upside. Until then, guys, you need to temper your emotions, okay? So, to summarize, trigger 1 is going to be the 22 EMA on the 3-month. Trigger 2 is going to be the 10 SMA on the 3-month. So I hope you guys enjoyed this video. If you guys did, let me know in the comments down below. If you guys are new here,